What's up, guys? Everyone keeps asking me, are stocks overvalued? Is Bitcoin overvalued? What's going to happen with the market? This is the great debate that's raging on in financial markets right now. Now, of course, we have the Federal Reserve, which is cutting interest rates. We know the M2 money supply is expanding. We know that China is now cutting rates and cheap money is flooding into the system. But we can also look at stock prices, at Bitcoin. All of these assets are at all-time high or near all-time high prices. That is concerning to all the bears in the market. Now, what's always cracked me up about the bears is that every single bear will tell you that there is a market crash right around the corner. They've been predicting a recession every year for the last 15 years. And yes, we had one, but none of them knew it was going to come because of a pandemic. And so you always have to be careful listening to the pessimist. But I've got charts and data to show you that maybe you shouldn't have as much fear as they want you to believe. Remember, optimists have data and history on their side. First, let's go take a look at the big tech stocks. What we can see is this chart from Michael Anatoli. He shows that their forward PE for the 24 months in front of us for the Mag 7 is actually half of what it was for the 2000 tech bubble leaders. Back in 2000, we saw that forward PE for 24 months was 52. Today, it's only 23.9. Then if we go and we take a look at the net profit margin, this far right column, you can see that the 2000 tech bubble leaders only had a 16% net profit margin, but today the Mag 7 has 28%. That means that a 24-month forward PE for the Mag 7 is half of what it was in 2000, and then the net profit margin is double what it was for those 2000 tech bubble leaders. This means that the companies in the Mag 7 aren't nearly as overvalued as they were back in that dot-com bust. But it doesn't just stop there. Nick Majuli, he came out with this great chart where he shows the U.S. stock performance during the 20th century and the 21st century. And he showed that there's a mean reversion. If you see here that red line, that is the 20th century, and the green line, that is the 21st century. What's interesting about this is although we just had a 15-year bull market in this chart, we know that there has actually been stocks going sideways from 2000 to 2010. And so even with that recent bull market, we just now are getting back to the same exact trend that we saw in the 20th century. This means that stocks are doing what they did last century, this century. So that should give you confidence that, again, stocks are not necessarily outside of the norm. What's up, guys? I hope you're enjoying this episode, but I got a quick message for you. I just released my very first book. It's called How to Live an Extraordinary Life. In this book, there are 65 life lessons that I've picked up over the years. These lessons will teach you about money, investing, relationships, work, health, happiness, and much more. In this book, I wrote letters to each one of my children, and I tried to share those life lessons with them. If you pick up this book, there's 3 things that I can promise you. The first is that it is very concise. The audiobook is only 3 hours. You can listen to it on a long drive or on a rainy afternoon. The second thing is that you're going to learn something. It's worth the price of admission just for the lessons themselves. And then the third thing is it will make you think more deeply about your life and how you try to live it. So go pick up How to Live an Extraordinary Life today. It's a quick read. It's very impactful. It's very concise, and it would mean the world to me for the support. Go check it out today on Amazon, Barnes & Noble, or wherever you buy your books. Hardcover, audiobook, it all works. Thank you so much for the support, and I'd love to hear what you think about the new book. Let's get back to the episode. But people always want to know, why do stocks go up? Why is it that if I go ahead and I allocate to one of these indexes, over the long run, we continue to see price appreciation? Brent Donnelly has a great tweet that he put out recently, and it's a simple yet important insight. He said that the simplest explanation for why stocks go up is not the Fed's balance sheet or passive flows or fake government economic data. It's corporate earnings. It's logical, and it explains many market mysteries, like why the Mag 7 has become such a huge part of the indice. They earn more money than their peers, way more money. Earnings obviously don't go straight up, but this chart shows you why it's so hard to make money shorting stocks. They have so many tailwinds, and shorts face many headwinds. There's borrowing, negative carry, risking infinity percent to make 100%. The worst companies are hardest to borrow against, etc. And so this chart from Sam Rowe really points out the S&P 500 quarterly EPS seasonally adjusted. Put in a log chart, and you can see from 1935 to 2019, the trend has been 6.5%. Earnings are the reason why we have seen the stock prices continue to go up, and it's another reason why we shouldn't be so worried about current stock valuations. Again, Occam's razor. The simplest explanation is the most likely. Now, before we end, there's one more data point that I find absolutely fascinating. Wall Street Journal's Gunjan Banjari points to this chart showing that after the Federal Reserve cut interest rates by 50 basis points, which was kind of this jumbo interest rate cut, money market funds are still seeing strong inflows, even though rates are down. And so this money market fund flow continues to hit all-time highs, which is a major narrative violation. If interest rates are coming down and people can earn less in these money market funds, why are they continuing to put capital in there? My theory is that there's just more money in the system. We know M2 money supply is expanding, and so people have to put that money somewhere. They're going to put it into stocks, they're going to put it into Bitcoin, and they are going to put it into money market funds. Now, also what was interesting this past week is that Lynn Alden and Sam Callahan came out with a brand new study that showed that Bitcoin is the single most sensitive asset to global liquidity. Approximately 83% of the time, Bitcoin moves in the same direction as global liquidity. If global liquidity is expanding, Bitcoin's going up. If global liquidity is draining, then Bitcoin is going down. The nice thing is that right now, global liquidity is expanding and Bitcoin price has been going up. And so I expect the expansion of global liquidity to continue, which means I also expect the expansion of Bitcoin's price to continue as well. Bitcoin is a decentralized digital asset. It is apolitical. No one controls it, and it continues to produce block after block of transactions. Because it has a finite supply, investors around the world continue to hoard it because they believe it is a great inflation hedge.
Today's episode is brought to you by Zapo Bank. Let this sink in for a moment. Over $500 billion in Bitcoin has been lost or stolen. Whether that is misplaced hardware wallets or an exchange that went bust, the risks are very real. That's why I think where and how you store your Bitcoin is absolutely critical. Now meet Zapo Bank, the world's first fully licensed and regulated Bitcoin-enabled bank. They're known as the Fort Knox of Bitcoin. With over a decade of expertise in Bitcoin custody, they blend no holdback security, including military-grade Swiss bunkers, cutting-edge digital protocols, and strict regulatory oversight. This comprehensive approach ensures your funds are always protected no matter what. With Zapo Bank, you can grow your wealth with interest paid out daily in Bitcoin. You can spend anywhere with zero FX fees using their global card, or you can make instant payments with the Lightning Network. Head over to zapobank.com/pomp to join. That's XAPOBANK.com/pomp. Go check out Zapo Bank today.
According to whoever becomes the next president of the United States, there is the possibility that inflation will come raging back. If that is to occur, then Bitcoin obviously will do very well. But even if inflation does not rear its head again, we see that the global liquidity expanding and therefore Bitcoin's price is going to go up. But it's not just Bitcoin. I also expect stocks to do the exact same. I expect all assets denominated in dollars over the long run to continue to go higher. The dollar will be devalued. We need to monetize our debt. We need to have a currency that is weaker than it is today. And therefore, that means that asset prices will go up. You're going to see real estate go up and to the right. Stocks will go up and to the right. Bitcoin will go up and to the right. All assets priced in dollars, given a long enough time frame, go up. Because it's not so much about the asset, it's about the dollar being devalued. And the Federal Reserve and our politicians, they have nowhere to go. Their back's against the wall. They're in the corner. They have to devalue the dollar. That is the only potential path out of this problem. We have a spending problem in this country. No one is trying to fix it. There is neither major political candidate for president who's talking about balancing the budget or getting the national deficit down. Some of them are talking about trying to cut costs, but no one has the courage or the authority to go in and actually slash spending so much that we get back to a balanced budget. It's been more than 20 years since we've had that in the United States, and unfortunately, I don't think either candidate is going to do that if they become president. And so if we have a spending problem and there is no relief in sight, then of course it doesn't matter how much tax revenue they take in. We simply are going to have to devalue the currency in order to prevent some sort of massive national default. That's my base case for what we're going to see over the next decade. And so if you are an investor rather than a saver, you're likely to do best. Unfortunately, the savers are the ones who are going to end up on the wrong side of this equation. They're going to leave all of their wealth in cash. That cash is going to be devalued. And although they think that they are saving their way to financial security, they're going to find themselves falling further and further behind. The difference between an investor and a saver is an education gap. We need as many people in the world to understand in today's world with fiat currency that is devalued, you have to become an investor. It doesn't mean that you have to go and take immense risk. You can simply buy the S&P 500 and dollar cost average and plan to hold it forever. But whatever you do, if you simply sit with 100% of your wealth in cash, it is going to put you in a worse position in the future, all because the central bank and politicians know they got to print money. They're going to spend it. They're going to devalue the currency, and those holding the cash are the ones who are going to get hurt. And so ultimately, when I look at the current stock market, whether you think a crash is around the corner or not, what I know is that over the long run, stocks go up because the dollar gets devalued. And so depending on what your time frame is, it really makes the argument that you can go ahead and you can allocate into the market. And as long as you can hold long enough, as long as you never become a forced seller, then stocks will continue to do what they've been doing for centuries, which is to go up and to the right, whether it's for earnings or it's for the dollar devaluation. Data is pointing in one direction, and the investors are the people best positioned to actually benefit from it. And unfortunately, unless we can get the word out and we can educate people, it's the savers that are going to get hurt most. Hope you enjoyed this video. Please leave a comment and let me know what you thought. I really, really hope that we can help spread the word on more education, and you sharing this video with other people is one of the first steps to doing that. I'll see you guys next time.